Now joining me in the studio to discuss recently released Q3 financials and the activities in the equities market is Chinedu Ifeonu, who is an analyst at financial derivatives companies. Chinedu, it's great to have you on the show with us today.
Thanks.
Now let's start with some of the Q3 results that we've seen recently. We saw results out from Sterling Bank, so it'd be good to get your thoughts first of all on those results.
Talking about Sterling Bank released okay results, we can say. I think revenues were up 31% to about 65 billion naira from about 49 billion naira in the prior period from the previous year. The numbers seem to be okay, but it's been a thing about opposites. There's been, on one hand, there's an increase in revenues, there's an increase in profits, profit after tax increased to about 5 billion naira. And there was an increase in interest income to, I think, a 25% increase in interest income. On the other hand, though, is an increase in operating expense, 25% on that end. In addition to that, an increase in taxes of about 240%. So, like I said, it's been a thing about opposites. So let's see what happens going forward.
Now, we didn't see the market react much to the result yesterday.
Right.
Do you think that we can see much reaction in today's session?
It's very possible. I mean, sterling doesn't seem to be doing too bad, especially considering the banking environment, the challenging banking environment at the moment. It's up 35% for the year. Compare that to the NSE banking index, which is up 19.1% for the year. In fact, going back from a year ago, it's actually down close to 3%. So sterling seems to be doing relatively well. And if you compare that to its peers, I mean, right now it's trading about 3.7 times earnings. So that's not too bad.
Some people may say that the stock is, is trading, cheap at the moment. It's still below 5 naira. So what are your thoughts on the pricing and the outlook going forward?
Well, I remember back in 2008 it was about 8 naira, thereabout. Now it's probably about 2.35 or thereabout. So look, with sterling, like I said, it's a situation where you have a bank that's doing well in the challenging banking environment. Talking about yesterday, there wasn't much of a movement, and I think it was Epictetus who mentioned that when a man is wavering between opposite things, he doesn't make much progress. We can now apply that to sterling in a sense, considering where it's been. However, going forward, like I mentioned earlier on, it's trading about 3.7 times earnings. If you look at its peers like Access Bank, Access is 6 times earnings. GT Bank is 8 times earnings. The broader market is actually 13 times. So far it seems to be doing okay, and I think the people are just waiting, investors are just waiting for that catalyst, maybe from management or whoever, to get that interest generated.
Let's move on to Dangote Flour. We saw Q3 earnings from them this week as well. Not too great results there, but still we've seen the market actually react surprisingly to the results. I mean, I believe that that stock went up 1.1% in yesterday's trade, which isn't much, but it's still surprising for some. So why is the market reacting that way to Dangote Flour?
It's interesting. Dangote reported, I think, a decrease in revenues to about 30 billion naira from 31. You also saw declines in just about every number.
Yeah.
And he reported a loss of about 7.2 billion after taxes.
Yeah.
Well, if you're looking into the results, with Dangote, they had about a 90% increase in distribution and administrative expenses, as well as a 54% increase in finance costs. But like you mentioned earlier on, we're not seeing the reaction in the market, because in the market on the first day we saw a depreciation in the stock, but yesterday there was a 1% increase, 1.1% increase in Dangote Flour. Look, at the end of the day, I think investors are buying into the brand, the Dangote name. It's well established, and for that reason, going forward, maybe investors expect to see better numbers, considering the fact that we're entering an election year. Consumer spending is expected to go up, so it should bode well for fast-moving consumer goods.
Let's also touch on Guinness, which we saw the earnings as well.
Right.
Not too great either. We saw revenue down, profit before tax down as well.
Yes.
What are your thoughts on Guinness?
Well, with Guinness, it was well expected to some extent. Back in Q3, I think management gave some guidance with their expectations going forward as a result of the fact that we're going through the rainy season, and normally that's not good for their sales. But now we're in Q4, we're in a festive season, a festive environment. We also factor in the fact that we're going into the election year, and like I mentioned earlier on, there should be an increase in consumer spending. So these are some positive expectations that would now give some positive sentiments to investors, hence the increase in the price.
Now, at the same time, with that stock as well, when the earnings were released on Tuesday, since then we've seen that stock go up 6.4%. Why is the market reacting that way to Guinness?
Yeah, like I said, I think going forward, the market is expecting more positive results, better sales. The numbers, yes, they weren't too impressive. I think it reported a decrease in profits after tax to about 1.7. Like I said, look, going forward, investors are looking down on the results and saying, look, we expected worse. We knew we're headed in this direction. We knew sales weren't going to be as robust as would normally expect, given the Q3 rainy season. However, going forward, there's an expected increase in consumer spending, an expected increase as a result of the election year coming that's upon us. So, for the brewers in particular, I think they should do well. But if you look at Guinness in particular, within its subsector, it's actually trading at about 31 times earnings. That's better in comparison to the other brewers. Yes.
Now, in your opinion, what stocks should investors be keeping an eye on as we move into 2014?
Oh man, you're putting me on the spot. You know, I mean, in 2014, like I said, the market in general is expected to do well, but there are always downside risks to the market. I mean, if, for instance, you have an initiation of the tapering process by the U.S. Fed, you're going to see immediate capital outflows from the capital markets, and that could also it's going to be negative for the market in general. But going forward, we expect that that the market should do all right. I mean, right now it's at about 39,119.
Do you think it will get to 40,000?
Given the present momentum, you want to draw that conclusion. I've looked at the technicals, and just based on the technicals, I would expect it to hover around its present level. But given the momentum in the past few days, weeks actually, yeah, it could easily get above 40,000.
Let's talk about what's going on in the oil and gas sector. I mean, that sector's gone up over 100% this year. Right. What are your thoughts on the performance we've seen so far?
I think the oil and gas sector is up about 104% from a year ago. Look, the performance is impressive, but it's driven by the likes of Forte Oil, Cornell, MRS. I think, first of all, you focus on their results. Recently released results seem impressive, but looking deeper into it, for instance, Forte Oil acquired Girigo Power Plant, a 414 megawatts power plant. That's, at least in investors' minds, expected to generate some better revenues going forward. And so for that reason, they're buying into the stock. But besides, now looking at Cornell and MRS, besides the fact that they reported good results, there is also that herd mentality that's driving everybody in that direction. Now, with regards to Owando reported a decline in revenues and has had a pretty challenging time over the past few months. But
it's starting to pick up. So what do you think is going to happen with Owando going forward?
Well, with Owando, I expect this recent rally to, well, not last for too long in a sense, but I think investors are taking a position based on the fact that they're expected to finalize the acquisition of the ConocoPhillips assets, West African or Nigerian assets, by the end of this month. So they're taking a position in anticipation of them being successful with that acquisition. We'll have to see what happens going forward.
Of course, I think everyone's keeping their eye out on Transcorp as well. Of course, they also acquired a power plant too, and we've seen that stock continue to rally. I mean, literally 2 weeks ago it was 197. Now it's well above 4 naira. Right. So is it too late for investors to tap into Transcorp? And is Transcorp the next Forte Oil in your opinion? Well,
Transcorp looks really good. It's already given impressive numbers since its release of results, and since it took over the assets of Ughelli Power Plant. It was one of the beneficiaries of the ongoing privatization in the power sector. And going forward, investors are expecting an increase in revenues. I mean, right now, the Ughelli Power Plant generates at about 160 megawatts. Going forward, management is giving guidance to an expected increase in generation to about 650 megawatts in by August 2014. And within the range of about 3 to 5 years, they're expected to increase production to about 1,500 megawatts. So investors are sort of reading into that number, and going forward, well, they may be making the right bet, but it's all a matter of time. We'll have to see where things head from here.
Do you think the days are over when, advisors like, would tell say to an investor that,
Right.
the banking stocks are the way to go? That's what everyone has, sort of said in the past.
Right.
Do you think those days are over? I mean, do you think that, we're looking more about, into maybe the oil and gas stocks in terms of, making, good returns on our investment? When you look at the performance of the banking stocks, 19.1% underperformed the all share index. Is this something that we can expect to see, happen next year as well, especially with all the new changes that have gone on in that sector?
Right. With regards to the policy changes and, those being introduced by the CBN, there's been a truncating of their COT charges, and that's expected to continue going forward. Also, there's been a decrease in their liquidity at the moment. Well, with regards to the banking stocks, the banking environment is always an interesting environment to operate in. But right now, they seem to be trading at relatively cheap value in comparison to the rest of the market. However, going forward, the environment is expected to remain challenging as a result of the CBN making an attempt to curb inflation and putting in all these different measures that seem to be affecting the banking sector adversely. But I wouldn't say it's time for you to now dive into the oil and gas sector. Yeah. I mean, prospects going forward, looking at oil prices in particular, we don't expect to see an increase in oil prices in 2014. As a matter of fact, we expect a decline.